If you're in the market for a new car, you may have noticed prices have skyrocketed over the past year. In fact, the average price of a new car has jumped about $6,000 over the past year to an all time high of just over $47,000. So, with that said, you may have found yourself in the market for a new used car. If you're on the hunt for a used vehicle, you may have some questions like how do you get financing for a used car? Where is the best place to get financing? And what should you be doing before you apply for your next used car loan? Hey there, I'm Chris Peach from MoneyPeach.com and What is Credit Union, and here are 6 steps you need to know before financing your next used car. Step number 1, check your credit report and score. Did you know that each year you are legally entitled to 1 free credit report from each of the 3 major credit reporting agencies? Head over to annualcreditreport.com and get a free copy of each of your credit reports from Equifax, Experian, and TransUnion. Now make sure to carefully look over each report for accuracy. A recent study found that nearly a third of Americans have errors on their credit reports. And if you find an error, contact the credit reporting agency and dispute it. By law, they have 30 days to fix any errors you find. The first step is crucial when financing a used car because items on your credit report will translate to the interest rate you'll receive for your used car loan. A good credit report translates to a higher credit score and can save you thousands of dollars in interest when compared with a credit score that is below average. The bottom line, do not overpay in interest because there are errors in your credit report that are no fault of your own. Moving on to step number 2, determine how much car you can actually afford. Now, most people find the car they want, they fall in love with it, and then they try to squeeze the love for that car into their monthly budget. This is not a good plan. Instead, determine how much you can afford and then find a car you love that fits inside your monthly budget. There are 2 rules you can follow if you need help determining your monthly car budget. Rule number 1, make sure your monthly car payment is 10% or less of your monthly take-home pay. For example, if you're banking $4,000 a month, then you need to keep your monthly car payment below $400. Rule number 2, make sure the total cost of your car is no more than 35% of your annual gross income. For example, if you make $100,000 per year, then the total cost of your car should not exceed $35,000. When you can stay within those 2 rules, you will still love your new car even after you start making monthly payments on it. Step number 3, research the car you want. Great! You found a car you love, and now it's up to you to do a little research on that car. The good news is there are thousands of other drivers who have already test driven the car for you, and they have a lot to say about it. You can check sites like Kelley Blue Book, NADA Guides, and Consumer Reports to see the value of the car, if there are any manufacturer recalls, the safety ratings, and anything else you may want to know. Also, by researching the car, you'll probably find something you didn't know about the car that could save you thousands of dollars in the long run, and you may even find a comparable car at a better price. Step number 4, now it's time to research the lenders. Up to this point, you've gone through your credit report, you determined how much you can actually afford, you've researched the car you want to buy, and now it's time to find the best place to obtain financing. A common misconception is that all lenders are the same. You may be better off visiting a local bank or credit union for lower interest rates, better terms, and much better customer service. I actually prefer to go with credit unions over banks for one main reason. Banks are owned by investors and credit unions are owned by both you and I, the members. Now this means banks must create profits to keep investors happy, whereas credit unions don't need to create profits for their investors, and instead they pass those savings on to you and I with lower interest rates and better terms for things like used car loans. Step number 5, apply for the used auto loan. Now, when it comes to applying for a used auto loan, always make sure to get pre-approved instead of pre-qualified. Pre-approval means the lender has already reviewed your credit report, your credit score, and any other information in order to determine your loan rate and terms. Pre-qualification, on the other hand, means the lender has done a very basic review of your credit worthiness to determine if you're likely to qualify, which also means your rates and terms for the loan are subject to change. Pre-approval is better for both you and the seller. It tells the seller you're a serious buyer, and it allows you to know what your actual rate, terms, and monthly payment will be before actually buying the car. Bottom line, always get pre-approved before making your offer on your next used car. Now on to the last step. Step number 6, buy the car. When it comes to buying a used car, you'll find one of 2 things. The car will have a lien on it or it won't. Now, if the car is a lien, such as a car financing loan, a car title loan, or a mechanic's lien, then your lender will actually pay off their lender first, and whatever money is left over will go to the seller. Then you will owe the lender in the form of monthly payments. Not to worry, your lender will typically manage this process for you, but it's still a good idea to know if the car has a lien on it by searching title records at your state's motor vehicle website. Usually if you have the VIN number or license plate number, you can do a quick search online to determine if there is a lien on the vehicle before you buy it. Now, if there isn't a lien, then easy peasy. Just make sure the seller has a title in hand and have them sign it and then transfer it over to you. Again, you can do all of this through your state's motor vehicle department, and some states now allow you to do it all online. To sum up everything, check your credit report first, then determine how much you can afford, research the car you want, find the best lender like a local credit union, get pre-approved, and lastly, buy the car. When you follow these 6 steps in order, you're in for a smooth financing process that has you driving off in a new used car with the lowest interest rate, best term, and a monthly payment you can comfortably afford. Alrighty, my friends, thank you so much for watching. And if you found this video helpful, do me a favor, hit the like button, drop me a comment, and share this video so we can help as many people as possible make better decisions with their money.